Bitcoin's looking bullish. Look at the chart and see Bitcoin bouncing off of the previous resistance. This has happened a few times. This has happened once or twice before, and so far this cycle where we had bullish moves, massively bullish moves afterwards. So is it going to happen again? Should you buy the dip? Let's look at that. Let's go through some of the big news from today. We'll also be looking at what Tom Lee just said about this market and everything you need to know on Monday. If you don't mind, hit subscribe so you can see future videos just like this. Also, if you're not already trading crypto and you want to, now is a great time to start. Over on BYDeFi, we have 5 days left on this trade and earn $10,000 worth of XRP event. You just trade whatever you want. You don't have to trade XRP. You can trade Bitcoin, Solana, Ethereum, whatever. And depending on how much you trade, you just get free XRP deposited into your account. And we do this with other cryptos over time. So it's just like free money as you go along. So you might as well get some of this free crypto. There are also some other links like BitUnix and Weeks that have special events going on right now too. Check them out. I added to my position this weekend, to my positions, but mostly just focused on Bitcoin right now. Bitcoin, I think, is the easiest chart to read. Everything runs off Bitcoin. You can see we're jumping off of the previous resistance. We're bouncing off and flipping the previous resistance into support. Honestly, I didn't know if we'd bounce off of 110 or 112, so I wasn't getting too greedy. I was adding to the positions here, and what do you know? We have a bounce up to 114.5. Now, this isn't like we are full back on and everyone's bullish. You can see we tried to get above this prior support level, and it looks like we have gone rejected a little bit now, but 115,000 would be nice to break out of and then get back into this range of 117,000. The traditional markets are up today too. The Nasdaq's up 1.45%. Keep in mind, there are a lot of company earnings this week. There are a ton. 20% of the S&P 500 announces this week, along with some of the biggest retail names, AMD, Spotify, Uber, Palantir. Back to Bitcoin. You can see we are trying to, well, we did break out of this multi-cycle trend, and it looks like we're actually trying to flip this into support. So yeah, a lot of things converging at one time to look pretty bullish in my mind. Markets are now pricing in a 90% chance of Fed rate cuts in September. This may be one of the reasons that we're seeing the market jump today, or maybe it's digestion after a great week of earnings. Probably the best I've ever seen last week. The market's maybe just pricing in that things aren't as bad as you think, right? We had no escalation of Russia and the US over the weekend after Trump said that he was sending nuclear subs outside of Russia. Really no bad news over the weekend in general, kind of a quiet weekend. So along with all these earnings this week, we do have a total of 5 Fed speaker events this week. Initial jobless claims, the 10-year note auction, July ISM manufacturing PMI data. So this will obviously influence the market, but I think earnings will be the biggest driver this week. And anything new out of Trump, right? Any wild cards where he institutes new tariffs or makes an executive order or something like that. Metaplanet acquired 463 Bitcoin for $53.7 million over the last week. Now they hold about 17,595 Bitcoin. Sequans also purchased an additional 85 Bitcoin. Now they have about 3,157 Bitcoin. Michael Saylor, a little bit quiet today. They did not acquire any more Bitcoin, at least as of now that they've told us. Although last week they announced it on Tuesday that they had bought Bitcoin, so maybe we'll see that tomorrow or even the next day, who knows. But I would not be surprised to see that they made a pretty big purchase because someone came in and bought this dip, a significant amount. And I would not be surprised if they were, buying from their $4.2 billion STRC pile that they IPO'd last week, right? They IPO'd that stock that has a 9% dividend. Again, they could be purchasing with some of that. Eric Balkunis explains why traders might buy the dip. It's worked in the past, literally for decades. Here's a look at the average weekly returns after a dip. Not as good a pop as it produced in 2021 and in the 90s, but still positive. So every year he has broken down the average returns from buying the dip. Now, I'm not sure exactly what he used as like a dip indicator. Maybe it's 5%. Maybe it's like a big 2% down day or something like that. But generally, the market bounces after a big dip. So should you be buying this dip? Yes, I think so. Whether you are someone that's acquiring Bitcoin for the long term and you just want to always buy more Bitcoin and you're never going to sell, or if you're someone that wants to take advantage of the bull run and maybe trade some or sell some towards the top, you should be buying every dip. Because if you're not going to buy this dip, when are you going to buy it, right? Like if we go into a bear market, we might not see a 70, 80% drawdown like what we've seen in the past. It might be a 30% drawdown, 40%. That's what we've seen recently. I mean, we've had 2 or 3 30 to 40% drawdowns in the last couple of years, and those dips got bought up really fast. There's just a level of demand for Bitcoin right now that causes the price to go up pretty quickly. Of course, we could always dip further, but if you have an income source that you can continue to buy Bitcoin with weekly, monthly, whatever, you can continue to buy dips. So if we fall down 40, 50%, I'm not telling you never to sell or to take profits. I'm not doing that. I actually trade crypto using leverage, and that's where I take my profits. But the long-term bag of Bitcoin that I have, I don't plan on selling. Maybe if we get to such what I consider like an overvalued level in a short period of time, maybe I take some and sell it or trim the position. But for the most part, that's not for selling. That's for holding. That's for my kids, my grandkids, that kind of thing. And, down the line, I can probably borrow against it pretty safely, but not now. If you had bought the dip from even the last top of the bull market, if you started buying at the exact top and bought all the way till now, you'd have a 3x on your portfolio. That's just buying Bitcoin, $100 a month. $100 a month. Now, you could have also bought more as we fall down. That's something I like to do. As we fall down deeper and deeper, I get uncomfortable. I buy uncomfortable amounts because it feels uncomfortable, right? It feels uncomfortable to know that we're falling down. We just continuously seem to never stop falling down, and you're buying the dip heavier and heavier. But that's when it's really important to buy even heavier amounts. So if you do like a dynamic DCA where we fall down further and you buy more, great. That's something that I like to employ even during bull runs, right? Like if we fall 10%, I'm buying differently than if we fall 30, 40%. So you buy at the worst time, the very peak of the market. And assuming you don't just lump sum buy, like cash everything out that you have and put into Bitcoin, which I don't think is a smart move. Assuming you don't do that, you just continuously buy, you make a significant amount of money. What most people do is they buy at the very top or towards the very top. They make a little bit of money, then they buy even more, like cash out 401ks, whatever they do, and throw money at the market, and then it falls, and then they panic, and then they sell, and then it recovers, right? And then they have a barrier where they mentally they can't get over that, and they don't want to buy Bitcoin again. That's what a lot of people do. Instead, you should just dollar cost average. Let's say you do have $5,000, right, and you have a $100,000 portfolio. Put $1,000 in there. Just start with a 1% position, then slowly add over time, $200 every 2 weeks or something like that, and acquire more Bitcoin. It'll be different for everyone though. But if you start breaking this down, you could make significant amounts of money. $100 a week, $5,000 a year, or $5,200, right? You could have gotten over 3x. You could have bought $19,900 worth of Bitcoin, and you'd be $63,500 now. That's awesome. So I do think that there's a huge opportunity to buy dips, especially during the bull run, right? And during the bear market too. It's really important to buy dips. But in a bull market, you don't see dips very often. That's the difference, I think, right now. It's important to make yourself buy dips during the bull market because you don't see them very often. We've seen one a year, maybe 2 a year, where we see 10 to 20% pullback. Some we've seen 30%, but that's where you really dump more money in. Of course, if we go into a bear market, we will see further dips, and you have to be comfortable with that and comfortable with what you're putting in. But I think long term, you're going to be happy if you're buying the dips and you actually understand what you're buying. Now, let's move on to Tom Lee. He just talked about the market. This is just as of a few minutes ago.
Fundstrat Capital. He's also the chairman of BitMine as well. As a CNBC contributor, we've got some new stuff to factor into your either bearish or bullish case. I assume it's still somewhat bullish, but okay, the economy looks like it may actually be slowing a little bit. Last week, the markets definitely retrenched. You've been solidly bullish since, Liberation Day. But last week was a setback, and August is not always a great month. You think we get a little bit of choppiness here? Are you still bullish?
Well, last week was definitely consolidation because we had 5 days where the market opened higher and closed lower.
Really?
And they call that bearish engulfing. It makes sense because we're consolidating that 28% gain from the April lows. And on the job stuff, I think it's just the data's catching up to what we already know. The labor market's been soft, right? So it's, I think, a positive setup because now the Fed has more ammunition to make a dovish pivot in the fall. And it's not too late because we know the thing that they're going to stimulate is the housing market. And you had a couple guests earlier talking about that. And so that is what strengthens the economy in 2026. So I think it's quite a positive setup. We're just consolidating and then we make a bigger move higher.
Is it fair to say that since it's a dual mandate, that maybe the Fed should have been able to think that there was more risk to a slowdown than to inflation? Do you think they missed that a little bit and they're fighting? I don't know, but Trump said you got to cut, so they couldn't. Maybe they had to err that way just for political reasons.
Yeah, I think the Fed needs to demonstrate independence, but you're right. I think when they look at their dual mandate, they're probably drifting further from the employment metric now because the unemployment rate, if you use the existing participation rate before this report, it's almost 5% now. So the Fed now has to be considering the risk of jobs market actually going into a cycle of weakening.
Right. But you have also been, I guess dovish is the word, on inflation. You have not thought that there was going to be necessarily a big impact from the tariff regime.
That's right. And I think the biggest takeaway is, first of all, if you look at the latest inflation report, the goods component that are tariff driven, it's been only mild. But also if you use the same inflation measure Europe uses, which is inflation ex housing, we're actually under 2%. The Fed, if they were the ECB, would be cutting right now.
That's interesting. So by the end of the year, or what target are you using now and what time frame?
I think we're gonna rally pretty strongly in August. So I think we can get back to 65 or get to 6,600 all-time highs in the next couple weeks.
And then 7,000 in the next 12 months, above that?
Yeah, probably well above that.
Well above that.
Yeah.
BitMine, we mentioned that at the top, is going to be, in your view, the micro strategy or strategy of Ethereum or Ether.
Yes, that's right. Just a month ago, I was on the show to announce I was becoming chairman. And at the time, the stock was $4.50, and we announced a $250 million investment led by Founders Fund and Mosaics and others. But today, we announced that we reached almost $3 billion worth of ETH. And
the largest ETH holder, then.
Yeah, the largest ETH treasury in the world and the third largest crypto treasury in the world. And we also announced that Bill Miller III made a major investment last week into BitMine. So he joins Kathy Woods in investing in our company in the past couple weeks.
That's the Bill Miller from Legg Mason we all know.
Yes, right? That's right. The Bill Miller that we all know.
Yep.
Yes.
He was super early.
Yeah.
Oh, crypto too.
No, that's what I was saying. Super. He was like, right? What was he getting in Bitcoin at? 2012, 13?
Yeah, he has some of the lowest cost Bitcoin out there.
What's your symbol? What is BitMine?
It's ticker BMNR. And the stock now is around 32. So in the past $4.50, yeah.
Yeah, they've crushed it over there. And for some of these bigger investors, it makes a lot of sense to invest in something like this, at least in this current climate, because there is such a demand for these products, like for BMNR or for MicroStrategy. Like they'll sell at huge multiples because they can acquire these cryptos strategically with low interest rates, and also they can stake it. And there's appetite from different institutions that can't buy these directly, so they have to go through a treasury company. And that's why, you could, if you're a big investor like Bill Miller, maybe put $100 million into this, and then it's valued at $600 million because they're selling at a multiple. So yeah, it is interesting. And we have Tom Lee saying that we could see 7,000 on the S&P 500. That's another 10% move from here. That's after 28% jump from the tariffs. Now, the ETFs, the launch of IBIT, have destroyed the volatility on Bitcoin. It's plummeted. The 90-day rolling volatility is below 40 for the first time. It was over 60 when the ETFs launched. This is GLD for perspective, gold's volatility. Less than 2x gold. Used to be over 3x. Some people are going to say this is bearish. Some people are going to say this is bullish. This is the institutionalization of Bitcoin. Sure, there are still moves, right? There's still some volatile moves here and there. We saw one last week with a $5,000 move down. But it's less volatile than ever. And while some people say, well, that's going to be bearish because MicroStrategy won't be able to buy as much because they're not as volatile, keep in mind, this also means that there's way more demand for Bitcoin than ever. So naturally, there's going to be more demand for Bitcoin-related products. So that's how they can sell $4.2 billion of a separate company, a different IPO, and MicroStrategy is able to go get Bitcoin with that money. Like, that was not possible last cycle. There wasn't enough demand for something like that, and now there is. So it's just fascinating to look at, like, Bitcoin's becoming more boring. Some people like that, some people don't. But as it gets more boring, more and more people are going to look at it as an investment choice. And, some people will say, well, again, if it's getting more boring, then the returns aren't going to be as good. That's not what's happening right now. Like, Bitcoin is still having really good returns, even though it's quote unquote boring. Over last year, it's up 90%. So even though there's less volatility, there's still a lot of upside. We just moved up to 115,300. You can see we're breaking back above that prior support level. This is bullish. There's so many bullish things happening in crypto. And really, when you look at it, if you're someone that's considering buying the dip, what has changed from $123,000 when you want to buy? Right? Like, if you want to buy up here, why aren't you willing to buy down here? What kind of bearish things have come out macro-wise or Bitcoin-wise that's made you hold off? It's probably nothing. It's probably just the price drop, right? There have been a couple things that have caused us to go down, but just 2 days ago, we were at $119,000. So yeah, it might not be the worst decision to buy the dip if you have capital and if you want more allocation to Bitcoin, right? If you're already overexposed or you want to buy some other asset, maybe you don't buy this. But if you're someone looking at this long term saying, I need more Bitcoin, when's the best time to buy it? The best time to buy it is now. It's always now. So if you want to buy this dip, maybe consider it. If you want to check out the link to BYDeFi underneath the video, this is where I trade. This is one of the places I trade. This is where I've traded the most in the last 2 months. Check it out underneath the video. They have some great competitions going on right now, and I'm in competitions. It's just like free money. Just depending on how much you trade, you get more. Thank you so much. I appreciate it. I'll see y'all.